Hi, everyone. This is Jason Bierach of Wall Street for Mean Street. Welcome back to another Wall Street for Mean Street podcast interview. Today's special guest is a returning guest. She's the chief market analyst at ITM Trading. Lynette Zang, thank you for joining me again.
Oh, it's my pleasure. It's good to be here, Jason. Thanks for having me.
Now, Lynette, I know you do a lot of research and you cover a lot of different markets, but why do you think the U.S. dollar measured on the dollar index has not rallied strongly despite the Fed doing a number of rate hikes the last 12 or so months, and the ECB and the Bank of Japan are doing massive amounts of QE the last year or so, and that doesn't seem to be strengthening the dollar?
No, and none of the markets work the way you would anticipate, but I think that it could very well have something to do with all of the emerging market debt that's been taken out in terms of dollars. Because you might recall that there were a lot of bankruptcies that were coming up when the dollar was getting strong, because they took them out with the dollar at so much even a lower level than it is right now. So that's a great question, and that's my frankly my guess answer. That's the most logical one that I can think of is to protect the EM debt bubble from bursting, because we're all interconnected. I think it would take everything down.
Yeah, so there's a lot of warning signals, and we were discussing before we started recording, we're starting to see a lot of signals that things are starting to crack. We haven't had any huge crash yet per se in the stock market or the bond market yet, but we are starting to see, cracks, whether it's the VIX and the XIV blowing up, the dollar index, despite these things. That would, in the past, correlations in the past when the Federal Reserve raised interest rates, the dollar would start to strengthen. It's not happening.
Right.
Dollar can barely hold 89 support levels now, and it might even test crashing down to 79 support levels. So it seems the rules are changing, and a lot of people are really scratching their heads right now. And so,
look, if this were really a free market, then your normal technically analytical tools would work. But this is a central bank-led rally, and you've got the corporations with all of the stock buybacks trying to help that rally continue. But yeah, I've been talking about pattern shifts since October is when I really started noticing a lot of the normal patterns start to break down, and the insiders, so that's the people at the top of the food chain in these different corporations, I've seen their selling escalate pretty dramatically.
And to add to your point there, the central banks have around 45% of global GDP on their balance sheets, and that's including the People's Bank of Japan. So yeah. I just don't rationally see an unwind. So in your opinion, do you think the Fed can continue to raise interest rates and also meaningfully reduce their balance sheet? They haven't even reduced their balance sheet by $100 billion yet without something breaking in the credit markets, the real economy, or asset prices.
Right. So no, I do not think that they have the look. It was an experiment loading it up. It's an experiment trying to pare it down. No, and the only place where I've seen them start to reduce the balance sheet has been in treasury purchases. And they've been a big buyer of treasuries, so that means somebody else is picking up that slack, and guess who would that be? But the pension plans and the retirement funds. So they've just been transferring the risk over to the individuals, which is pretty typical. I mean, we're seeing that all over the place. But no, they can't, because and the buying in the longer mortgage-backed securities has exploded since July. Exploded. Don't hold me to this because you can find it on the Fred, but I think it's more than tripled or some ridiculous amount like that. So yeah, no, they can't reduce their balance sheet, and they know it. They know it.
Also, to add to your point there, too, I did a short video on this a week or so ago. When the dollar index was about to break 88 and the Federal Reserve had been trying to reduce the balance sheet started to slightly increase again. So it looks like they are watching that dollar index. And so they're going on TV and through the publicly available mainstream financial media, and they're saying they're going to reduce their balance sheet. But when you actually look at the numbers, they are starting to increase it again. So they haven't.
Voila.
So do as I say, not as I do then.
Exactly. That's what my father always used to say to me. And I'm so glad he did, because I'd always say to him, Daddy, that does not make any sense to me. And that's why I listen to what they say, but I watch what they do. Do their actions support their words? If the answer is yes, then I guess you can believe them. But if the answer is no, there you go. And much of the time the answer is no. What they're going to tell Main Street is way different than what they're doing for themselves. Like, what are they doing? They don't want Main Street to accumulate gold, but they're accumulating. Well, I don't know that they're doing it in this country because they're really not revealing. You know, supposedly we have the same amount of gold in our deep storage that we've had since I think it was 1954 or something like that. So it's ridiculous. But everybody, all the other central bankers are accumulating gold, not Canada's. But most of the other ones are.
And Russia, supposedly, I just saw this from my friend Brent Johnson at Santiago Capital. If the gold price went to 2,400, Russia would have 100% of their monetary base covered by gold. So pretty insane how much they've been buying.
Well, there's a reason, isn't there? Right? I mean, why would central banks be accumulating gold? And it really isn't so much because the market says that it might go to 2,400, because what they're really referring to is Wall Street spot market, which is just a derivative and really doesn't have any logical relationship to the physical gold market. So 2,400, based on the level of new money that they've created and all those derivative bets, that's chump change. Of course, in terms of dollars or any other currency, it's going to go much, much higher because that's how they perform a reset, and they have to reset this system. There really is no other option. The tools to create new money in this system, which is constantly compounding debt, well, this debt is already no longer payable. And you know what's happening when you create debt, you have to pay interest on that debt. And they talk about the interest becoming the largest line item. But I did a study, I think it was like 2009, 2008, 9, 10, something like that. It was shortly after the crash started. And at that point, I saw that 77% of the debt that we are servicing was already compounding interest. So deficit spending means that just goes on. And now they're talking about that becoming the biggest line item. Of course it is. And even if we stop spending it, keep growing because we're compounding it.
But no one wants to stop spending. I mean, President Trump, he's a big spender now. The Republicans in Congress just made a compromise to increase spending. So they're only disagreeing on where to spend the loot.
Exactly. And I mean, they are coming out and saying how great everybody is cooperating on lifting this debt ceiling. But they made that deal, a month or two ago, where essentially they really weren't going to put any limits on what the government can spend for a couple of years. So, yeah, with all the tax cuts and everything, I mean, the deficits are going to get tremendous. And they're already they're already shifting in the other direction. But, you know, when I did that study, and anybody can look on the Federal Reserve Fred, you could just put in deficits and surpluses and you'll see it for yourself. While there certainly was deficit spending since we went to a pure debt-based system in 71, the lion's share of the deficits really came in during the crisis to fund the crisis. Well, we're out of crisis. All of those fines and fees that the banks were paying between 2008 and now have gone to, and all the Fed buying has gone to reduce the deficit from where it was at the height of the crisis. But it's still significantly higher than it was before we entered the crisis. Significantly.
And I'm actually a fan of private sector tax cuts. The problem is that there was no corresponding cut in government spending. So then you're doing like supply side economics, and you're kind of have the Dick Cheney belief where he said deficits don't matter. Well, maybe for a short amount of time, deficits don't matter. But now we're at a point, Lynette, where I did a short video on this as well. At $21 trillion in the national debt, a 1% increase in interest rates, that's a $210 billion interest payment. That's not paying off the principal. That's just a $210 billion with a B interest payment per 1% increase in interest rates. So, you know, if interest rates go up 2 or 3%, that's going to blow a hole in the government budget.
But yet I will tell you that I think that the central banks are hell-bent, in this country anyway, are hell-bent on raising interest rates because the tool that they have for to stimulate the economy is dropping interest rates. And I think if we go back from when this grand experiment started, I think they had to drop them an average about 5.75% in order to stimulate the economy. Then they'd start raising again, which again, that would tighten credit. And then we'd go into recession. So, you know, the theory is that it's inflation that's running really hot, and so they raise the rates to cap off that inflation. Well, they're saying now that they need more inflation, but why are they raising interest rates? It's only to try to give them back that tool. And even if they accomplish their goal, which I think is 3.5%, let's see, the average every single time, there was no time where they did less than, I think, maybe 5.25.
Well,
okay, so that's
Alan,
negative rates.
The Keynesian academics do want negative rates. I don't know if we're going to have, you know, permanent negative rates in the banking system where people in America, they're going to get charged a couple percent points to park money there. I'm not sure. I hear that goes on in Europe now that we have negative rates there. I'm not sure Americans would fully go for that. But Alan Greenspan was actually raising rates before he left the Federal Reserve prior to the housing bubble, and the gold price was going up. And eventually, you know, he raised rates enough where that cracked the subprime housing bubble. Obviously, there was defaults that led to that too. But the interest rates on the teaser rates and all those things, those reset when the interest rates were going up. So I think, you know, I'm not sure if they realize this, but the more they raise rates, the more likely it is for something to eventually crack and break.
Well, yeah, exactly. That's why every time they've done it, it's then ultimately led to a recession. So yeah, that definitely will crack because the system and really for as far as the negative rates go, what they already know how they are going to get us to volunteer cash. That's the problem. That, you know, they've been testing the negative rates in Europe, in Japan, you know, in Sweden, of course, is where they started the negative rate experiment, Switzerland, etc. And it isn't so much, you know, what the consumer will tolerate. It is more whether or not we have an option. As long as we have a cash and the cash maintains your principal, then we have an option. But what they want us to do is spend because, you know, we've gone from a manufacturing-led economy to a consumer-led economy. They need people to spend money. But, you know, where they may not see inflation, the average person that's got to go out and buy that loaf of bread or put that gallon of gas in their tank and it matters to them, however much they take in is just barely keeping them afloat, they're seeing inflation, even if our government isn't. Maybe they're like you pointed out earlier with the box of cereal, you know, the box looks like it's the same size, but the content is less, which means they use it up faster. So, you know, I think we definitely are in stagflation more than there's no inflation. But you've got the weight of the stock market, the bond market, the real estate market, which were targeted for reflation, and they still refer to it as the reflation trade. You have, you know, when those fall, that's deflationary. But if they can get you to spend more, so the question is, you know, how can they force the negative rates on you? Well, if you can't pull out cash from the bank to preserve your principal, then they can do it. And that's what they keep saying. As soon as we get rid of cash, there are no limitations to how low we can put interest rates. And that's really about attacking your principal. And that's what, you know, if this isn't the ultimate new currency that's coming in the crypto form, then this is the one that is designed to really take all the wealth, get us to volunteer our wealth. Because if somebody went to steal it from you and you were there, you could fight. But when they're doing it invisibly, first through inflation, which is the tool that they've been using, because they know people don't understand inflation, well, they've used that up. There's only 4 cents left of purchasing power left. So now they have to go to principal. And that's what the negative rates are about. And that's what the cryptocurrencies are about. And this quote-unquote trustless system. That's what all of that stuff is about.
even though there's only 4% of the purchasing power since the Federal Reserve was created with the dollar, they could still cut it in half again and then cut it in half again. I mean, it just depends on whether the American people will take it. And so, if there is, when there is, not if, but when there is another global financial crisis, I think it would be an easier sell job to go to the American people and say, look, we need to do a banking holiday or something like that. We need to do a dollar devaluation, or the banks need negative interest rates to earn extra money. So they could lie to people like that. But you're right about inflation. John Maynard Keynes, and I don't like Keynes pretty much about everything, but one of the best things he said was that not one person in a million can see inflation and understand what it really is. And
And
that's a stealth tax, yeah.
Absolutely, because inflation causes nominal confusion. I mean, you had a $20 bill 10 years ago, you got a $20 bill today. Nominally, it's identical. But what that would buy you 10 years ago, or heck, even a year ago, is far different than what it buys you today. So people don't see the loss of value, which is also how they get people to buy into the stock market. In terms of dollars or any of the fiat markets, the debt markets, any of that stuff. Because if they make the stock market look in terms of fiat dollars like it's going up, when all the while the value of what it's constructed from is going down, then really what's happening, right? Because $1 trillion, and ultimately, and you're right, yeah, they can keep cutting the value of it as long as the public has confidence in the dollar, they can keep reducing its value. Absolutely. They're just being prepared because they know that it has almost no value left. They know that trust in the government is at the lowest level that it's ever been. I personally think trust in the bankers should be a whole lot lower than where it is, even though that's been going down. And somehow they don't, people generally cannot make the transition from distrusting the banker to distrusting Wall Street. Though pretty much every day there's a scandal.
Yeah, I agree. I agree about the bankers. Like during the 2008 financial crisis, shortly after, there should have been bankers that went to prison, and that just didn't happen. The rule of law, it's not just bankers. There's corrupt politicians and bureaucrats in this country. There's people that need to go to prison for clearly committing felonies that are not going to prison because they have the right amount of money or the right political connections. But about your point, about the $20 bill, 10 years ago, I could go into Outback Steakhouse and I could get a steak dinner for under $20. Now 10 years later, that $20 bill won't get me a steak dinner now at that same restaurant. It's more money than that. And $20 will barely even get you a pretty good hamburger at a decent restaurant. I mean, even Shake Shack now, a hamburger and a combo meal there is like $15 for a hamburger and a drink there. So yeah,
that's ridiculous.
And if you live in Lynette, and if you live in a major city, a hamburger now is what a steak used to cost. So
my God. Well, I can remember when I first moved out here, and I don't mind saying that I'm 63, so talking about my age, and I had a girlfriend, and we used to go out to the nicest restaurant in town once a month. It was like our treat, and with appetizers, entrees, desserts, and a bottle of wine, it was $25 a piece at the best restaurant in Phoenix. So, yeah, now, like you said, Shake Shack. $25, pretty much Shake Shack. That's yeah.
So let's talk about the bond bull market. So you believe in negative interest rates, but the Federal Reserve at least wants to hike rates. What do you think this means for the bond market? Is the bond bull market over?
Oh, absolutely. We were in a 30-year bond bull market because once we made that transition in during the 80s, they ratcheted interest rates up. Overnight rates, I think, overnight were like 20%. And so, yeah, we've had all this time in a great long bond bull market. And now you have interest rates, 90% of the industrialized world anchored somewhere near zero. Okay, well, where do you go from here? And the only reason why they want to raise the rates, and they've said this, is so that they could lower them during the next crisis, not because inflation is running too hot, because they want more inflation. But even when there were in February, when it came out, the employment report came out showing that wages had increased at a faster pace than they had since whatever date that was. that was used as the excuse or the kickoff for what we've been going through, this market correction that we've been going through. So, you know, we got a problem here. Yes, I think the bond bull market, the problem is debt. Bonds are debt. Make no mistake about that. They can call them bonds, but they are debt. We can't pay the debt that we have. It's done. Yes, it's over.
And the other story that's been coming out, Zero Hedge has been covering this for a while, but now the mainstream financial media is picking this up. You know, in the past, LIBOR, the London interbank operating rate, a lot of people got fined or went to prison or at least on trial for manipulating LIBOR. That was a huge scandal, I don't know, 4 or 5 years ago. But recently, there's been a big spread increase between the regular interest rate and the LIBOR rate. I think the spread now is double the interest rate. So banks, when they're borrowing from each other, they have to pay double the interest rate of what they are borrowing from. It's pretty crazy. What do you think that means? That the banking system in Europe or China or somewhere else is in trouble, and we haven't no one's admitting it yet?
Oh, well, I would definitely agree with that. But I don't know if you have, because they discontinued interbank lending, and we could take a look at cross-border lending, but banks loaning to each other, that really plunged in 2008, because it was then that I think that they really realized that they're all insolvent. So when one falls, they're all going to fall. But oh yeah, I'm 100% certain that there's a lot of bad stuff that's happening, and especially in China, and especially in the shadow banking sector. You know, shadow banks, they really rarely talk about this, but these are corporations that perform some of the functions of banks, like lending, etc., but they don't take in deposits, which means they don't have that reserve, that cushion, so to speak. And that's a big problem globally, particularly in China. And things there are well hidden.
I've read a few articles on this, one from Bloomberg about the shadow banking system in China, and it seems, you know, that the Chinese, a lot of the banks in China, for listeners not familiar, the Chinese government owns, I think, around 90% of them, and they force these banks to give out often really bad loans that the banks know will never be paid back to municipalities and state-owned enterprises and other, you know, corrupt, crooked government, either government companies or pseudo-government companies. But, you know, some of these either middle-class Chinese families or affluent Chinese families, they were trying to earn extra interest rates on their savings, and so they put money, they were offered, you know, they can make some extra money giving loans in the shadow banking system. I've read stories about where their money disappeared with hundreds of thousands of dollars within only a couple months.
Duh. I'm so shocked. Do I sound shocked? You know, I mean, because, you know, they definitely, the lines are drawn, and everybody should be quite clear on who is too big to fail and who is not too big to fail. And it's the public that is not too big to fail, because they do not have the skill sets, the tools, the wealth, or the clout to fight anything. And when that money's gone, what do? Nothing you can do. Give it back? Too bad.
Well, in China, aren't they supposed to execute the criminals who do that? But it seems that a lot of them either move the money out of the country. That's why the property values in Vancouver and Toronto and London and the United States were so high, because a lot of corrupt government and corrupt corporation, Chinese corporate people move the money out already that they've stolen.
Oh, yeah. And especially a lot of that has taken place, particularly since end of 2015, and a huge push into 2016, which, you know, Ambang was not really, basically, they've been around for a little while, but they were minuscule until all of this basically free money, and then they became huge, and they're not the only ones, but the shadow banks, they are one of them that have gone out on these massive shopping sprees outside of China. You're absolutely right. And so that's why the Chinese government came in and took them over, and now they're looking to liquidate a lot of these premier properties, but the markets have softened. I mean, when they were on the buying spree, they were pushing the prices up to, you know, huge numbers. Well, that's slowed down, and prices have gotten soft, and this is what the Chinese government, I don't know what they're going to do. They're talking about selling into it, but that would probably not be the smartest thing in the world, but doesn't mean they wouldn't do it.
Yeah, they've nationalized Anbang they claim for only a year, but I normally when the governments make claims like this, it's normally not true. Remember, the gold standard was only supposed to be, when Nixon shut the gold window, it was only supposed to be temporary. Everyone was adamant. It would only be for a year or two. And
right.
Look, so that didn't work either. So I really think...
And if they really did only take them over for a year, why would they turn around and start selling off their portfolio?
Exactly, and they're doing the same thing with H&A. And the other thing, Lynette, is with
exactly.
So this Anbang and H&A thing, it's very opaque. We only know some tidbits that have been released, but we know that Anbang now is larger than AIG. And the other thing that worries me about H&A that I haven't heard a lot of people talking about is that H&A was used a number of years ago to bail out Deutsche Bank.
Isn't that a joke? And who's going to bail out Deutsche Bank this time? Because they are not in a great shape.
Yes, and it looks like the Chinese government's going to have to bail out H&A. So maybe we'll have to see what they do with Deutsche Bank. I mean, everyone's known Deutsche Bank's been a huge problem for a very long time.
Right. But the problem with all of them is really how interconnected they are. That's even why when they're talking about, putting tariffs on, well, there might have been a day when that would work when, let's say a country actually manufactured a good, but now the manufacturing is spread out. So you get pieces and parts from all over the place. It's not really quite the same. Thank you, globalization.
Well, I think, Lynette, that people, especially politicians and a lot of, the mainstream Keynesian economists, they just don't learn from history. So I'm seeing a lot of the same mistakes of the 1920s and 30s are being repeated on even larger scales than back then.
Well, I wonder if that's not because that was the beginning of this experiment. And this is, I keep saying that this is the end of it, but I'm also kind of looking at the public still does have some principle. And that's what the negative rates go to. Are they, if we are aware, I know we're going to a cryptocurrency because that's the direction that the central banks want to take us in. They want to they call it dematerialization. They want to dematerialize absolutely everything. And we don't realize what they're doing with that. But, if you stop and think about it, if we don't understand that their goal is for us to volunteer our wealth, then they'll be able to continue to get away with it. That's why your show is so important. What I do is so important. There's lots of really wonderful people out there that are talking about this. And that's why it's so important also to spread the word about it. Because if they know that the public is watching, they can't get away with as much.
We'll be right back with Lynette Zang after a word from our sponsor.
Do you work out routinely and eat healthy almost all the time? If you eat paleo or vegan or work out routinely, you may be eligible to save up to 33% off on your life insurance thanks to Health IQ. Health IQ is a venture capital-backed, big data technology life insurance company that offers customers life insurance at special rates by using the latest technologies. For more information, please go to healthiq.com/WS4MS. That's healthiq.com/WS4MS. So I realize that there are a lot of the people in power, the economic and political elites, who are going to try to hijack this blockchain technology. But I think, the technology itself isn't bad. I don't think any technology necessarily is good or bad. It's the people who are wielding it. So a hammer in the hands of a carpenter can build a beautiful house, but a hammer in the hands of, someone in ISIS or Antifa can murder someone. So
exactly.
So that's kind of the way I view technology. So I think, there are some benefits to cryptocurrency. I am worried, though, that with the government can force people into this cashless society, make it easier with digital cryptocurrency. But why do you think then Americans prefer cryptocurrencies now over precious metals? Do you think it's because a lot of them like technology, or do you think they're being brainwashed, or they see the prices, they were chasing the prices up? Why do you think that's the case?
Yeah. I think it's probably a combination of everything that you said, but I personally do not think that it was a coincidence that Bitcoin came out right around the same time that they were doing QE. And so I think that, and look at how it's being sold, which is perception management. if you go back and look at the white paper the NSA did on cryptocurrencies from 96, you know, and you just look at the index, you're going to see the same verbiage that's used today. So I don't think it's outside of the system, but that's how it's been sold. And it's been sold as a gold alternative. Every image of Bitcoin is a gold coin when there is no image for it because it's a mathematical formula. It would just be a whole bunch of zeros and ones. So I think, yes, it has been sold to the public that is paying attention as a way to get out of the system. But when you're doing it, you're inside of a computer network. And I mean, I'm sorry, haven't the governments shown you enough how easy it is for them to have access to all of that data?
Yeah, that's a good point. Yeah, we have Edward Snowden and Julian Assange and other whistleblowers showing us how not only have the government been spying on us for many years that most people wouldn't think was possible, but the big technology companies, which I don't think they're very fair, they've sabotaged a lot of the growth on my YouTube channel and reduced the amount of Google AdWords revenues I get. But, you know, they've cooperated in this. They've been very complicit in this as well.
Well, because they both, you know, big corp and big data. So while big data has been lining the pockets of the big governments, they've been allowed to really create these monopolies, you know, and even if they do start to deal with it now, I mean, like Amazon, they go into any industry and their model was to lose money. Well, you know, a mom and pop can't lose money. They can't stay in business if they lose money. So they've already gone in. They haven't had to pay I mean, this was not a level playing field, not by anybody's stretch of the imagination. And all of these companies really have been allowed to just grow to phenomenal levels, so much so that I believe the only cities that generate more revenue, and remember those are mostly taxes, fines, fees, than Apple is Manhattan, is New York, and also Manhattan and Los Angeles are the only two cities, and I'm not sure the Apple may have surpassed Los Angeles by now because the study I was just looking at was from May 23rd, so about a year ago. So, you know, and they're larger than many, many countries as GDP as far as their income goes. So that gives them a tremendous amount of power and clout and even a certain level of sovereignty. And so I think what we may be seeing now is that the governments are waking up to this level of power. And so, you know, part of the reason why I think you're seeing a correction, it's not just this most current Facebook scandal. I mean, Equifax also, you know, had huge data breaches. So did Kmart. You know, I mean, look at it. If it's on the web, there's people that are going to hack it. Many breaches that we don't even know about. But I think it's all of the regulation and this new taxation that they're looking at globally, et cetera, is because these guys have just gotten bigger than governments.
And Edward Snowden called Facebook recently a spy agency. So maybe it started off, you know, very small as a way to connect old college roommates or friends and family members if you move, things like that. And now it's gotten into a very big business, knowing invasive all these things about you to sell to advertisers, taking all the information that you give away for free and making billions of dollars off of it and turning it into a very intrusive spy agency. Meanwhile, you know, these large corporations, and a lot of them don't pay any taxes, and they spend enormous amounts of money for regulation to protect their interests. It's become, you know, very, very monopolistic of a system, very anti-competitive, very anti-free market.
Oh, yeah, and very anti-Main Street, because AOL, or not AOL, but Amazon may be going in and generating 50,000 jobs, but they're very low-level jobs. I haven't really seen any articles where employees of Amazon were tickled pink.
Yeah, plus they destroyed, you know, a bunch of other local communities, yes.
Oh, absolutely. That's why I would never shop at a Walmart. They did the same thing. They go in with their size and their heft and they undercut. Well, when you have that level and you have that much money, you know, there's two different sets of rules. And I think we need to take our communities back. We need to take our community. I mean, I'm not talking about stopping progress, but I am talking about, we're talking about the spying. You can't go through an intersection. They've got sensors now that they're putting in the roads. They are, we are getting to be a full surveillance state, which I believe is the UN objective 2030. That's why it's so important for them that everybody be inclusive. They make it sound pretty, but they want everybody in this digital system because then they have full control. And what sits on top, and, again, I agree with you about, I can see some really good things in the blockchain technology. So it's not the technology that's bad. The same thing with the smart contracts. It's not the contract itself that would be bad. It depends on who's wielding it. That would determine whether or not it was good or it was bad. But, China is experimenting with a full surveillance city. And this is supposed to be the role model. This is who's bringing the new currency into the market. This is who, if the IMF have their druthers, this is my opinion, I can't prove this one. But that's the model that they would like to see globally, is what we see in China. And China's decentralized government, but we certainly know where all the power is. They don't need, now we have a dictator, no more terms. And, I don't like what I'm seeing in China for sure. I don't want it to be here. I don't want my children or my grandchildren to live under that.
Yeah, I agree. There's a lot of people in the alternative media and gold community that defend China because they bought a lot of gold. But there's so many problems in China. They have a huge credit bubble. They treat their citizens really poorly. I think now if you say anything bad about the Chinese government, you could be denied to go on, blocked from going on trains there or at the airport. So it's... Yeah, so they have like a social credit. They have a new social credit. Yeah, and then basically, how can you earn a living if you're a businessman? You can't. It's made it so basically, if you speak out, there's no free speech there. There's no free speech in a lot of Europe as well. Look what happened with Brittany Pettibone and Lauren Southern, and it's the stuff that's going on in a lot of these different countries is just really crazy in terms of loss of freedom of speech and human freedom and liberty.
But I hate to say that because we always look outside of our borders, but we have surveillance here. The NSA has access to all of your phone records. You think that all of the data that's floating around Facebook and, on the internet is not being scrubbed by the government?
Oh, yeah, they have everything. Yeah.
Right.
Yeah, they have everything.
They have everything. So, it's coming to a theater near you. It's just that there are certain places that are tagged to go first to break the ice. And if you stop and think about it, it was Sweden that first did the negative rates. Okay. I don't know for sure that it's China that is doing the absolute first full surveillance city. I haven't heard of another full surveillance city, but I think so. We did QE first, right? We did that. So
well, the U.S. had to initially, because remember we found out in the one-time partial audit that Ron Paul got with both houses of Congress. He actually got them to agree. Bernie Sanders and everyone else. He actually got Republicans and Democrats to agree on a one-time partial audit of the Federal Reserve. We found out that the Federal Reserve bailed out pretty much everyone during the 2008 financial crisis. They bailed out foreign central banks. They bailed out foreign governments. Yep. They bailed out multinational corporations. So they printed tens of trillions of dollars in basically no interest loans via currency swaps in some cases with other central banks that they didn't have to pay back. So
thank you.
It's crazy.
Yeah. Well, it's easy to do when you don't have honest money. Honest money, in a normal market economy, when you're doing well, you accumulate wealth and you start to spend it, and then somebody else gets to accumulate wealth if they've been creative and they've worked hard, etc. But in this, it's if you are a bank, then you will, and you're a big enough bank, then you're tagged as too big to fail, and no matter what, we will bail you out. And so there is a very clear relationship between I don't really want to say Wall Street and Washington, although that's certainly applicable, but it's broader than even Wall Street. And it's broader than even Washington.
Well, I live right outside of Washington, D.C. I've lived here since the year 2000. So, yeah, it's very incestuous here. I've spoken off the record with a banking lobbyist at length. He said basically nothing really is going to change until everything blows up.
Right. And that's because They know, look, these guys created the system. They understand it better than I do, certainly. And hey, if you know that you're going to declare bankruptcy, what do? You go on, and you've got credit cards, you go on a spending spree. And that's what they're doing.
Well, if you're an investment bank or a large, commercial bank, and you have the central bank backing you, and this Lehman Brothers thought they were getting a bailout. That's why they went crazy. They were, up until the last, couple hours, they still thought they were going to get a bailout, but they were made a sacrificial lamb instead. But I don't know if the system can handle another Lehman Brothers at this point, because nothing was really solved after 2008. Everything was just papered over with more easier money and credit, and now we have literally dozens of new, I call them economic landmines of credit bubbles and asset bubbles now.
It's interesting that you say that, because I was thinking the same thing. And then the other day, because it's the anniversary of of Bear Stearns going down, right? So they had a lot of people that were involved in that shakeout on CNBC. And somebody said something there, and I don't remember what it was because I was in the shower at the time that I heard it, but I went like, that's why. Because they didn't view it as a problem of the systems. They viewed it as a problem of the technology. So, of course, why are you going to change derivatives or stop them or do anything with them if you don't think that that's a problem? That's a leverage tool. And what do banks know? They know debt and they know leverage. So technology, think about this. The cryptos are infinitely divisible. Now, I don't see how they can take the debt if they are indeed immutable, like they say. I don't see how they can take the problems that caused the death of the old system and bring them into the new system.
It would be, so I think this goes to what Catherine Austin Fitts has been saying for many years now. I'm not sure if you're familiar with her work.
Oh, yeah, I think she's brilliant.
I do too. I don't agree with everything she says, obviously, but I think, she nailed this part. And she's been saying that the central banks, part of this wealth effect and reflation with the asset prices was a giant global debt for equity swap. So the central banks are propping up the assets. They don't want the assets to fall because they need to move from a debt-based economy more to higher asset prices and a debt for equity. And they need to move to more of an equity, more of a high asset price economy then instead.
Well, okay. Because like you, I don't agree with everything she says. However, what I will also tell you, because it's something that I pay high attention to, is that, there is no doubt in my mind, and I feel that the data proves that the old system actually died in 2008. It is merely a zombie system now. And
Agreed.
So what I've been paying attention, and I 100% agree that it's been a debt for equity swap, but look at who is now really buying, right? So it's been a risk transfer. All of this paper over so that people don't really understand what's happening has been about transferring the risk from the banks, from the private sector to the public sector. And I'm not talking about necessarily to individuals, because a lot of individuals are sitting on the sidelines, but I am looking heavily at the pension systems that are now, we say, well, who's going to buy the bonds if the Fed no longer buys the bonds, or who's going to pick up that slack? Well, I'm looking at the data, I'm looking at the flow, and it's pretty obvious that it's retirement plans and pension plans.
So you think they'll do that voluntarily? Because I've heard Jim Rogers talk about this, and I've even talked about this, that at some point that you mentioned that the governments assumed the liabilities of the banking system to bail it out, to buy more time, but now the governments a lot of them are way too much in debt. Do you think then that they're going to force like pension plan money, and supposedly there's around $20 trillion in retirement account money in the United States? Do you see a point in the near future where the politicians or the Treasury Department or something will force Americans to put, 1% or 2%, at least to start, Camel getting their nose under the tent, that small amount of money required to buy treasuries, U.S. treasuries for national security or something like that, and then increase that?
Yeah, I don't think they'll do it for national security. I think that that the way that they're going to spin it is for safety, although government debt is not so safe. However, But they already have. I don't think this is really something that's happening in the future. And whether it's an absolute, I'm going to dictate that that's what you do, or just like we see the Wall Street and Washington hand in hand cooperating, when you look at the data, that's actually what you see. Okay, so that has already begun. In fact, yeah, that's exactly what's happened. Absolutely. And the other part of that nobody talks about, and I saw this in the spreadsheet for the bank for international settlements, but they have since deleted it. But the CFTC has since confirmed it, so it's kind of like a thing. What nobody ever talks about is the central bank use of derivatives themselves. Because up until the crisis, it was very, very little. Maybe a little bit of currency hedging, okay? Maybe. But once the crisis hit, then they not only did they go in and buy all those really awful derivatives off of the bank's books, so that would make some sense in their holdings that you would see them jump a significant level, but they were actually trading them, and the CFTC in a report even talked about how the central banks have synchronized all of the markets. So if you're synchronizing the markets, and then you're also using derivative bets to play the markets, the way you synchronize them, I don't know why the central bank's balance sheets are so big. Actually, that's a really good question. What are they doing with all those gains? Are they giving them back to the government to try and reduce the deficit, or because, central bank excesses do go back to the Treasury?
They're basically hedge funds now, especially like the Swiss central bank, because they've been buying shares of technology companies like Facebook, and for a while they even owned a pretty nice portfolio of gold mining stocks. So I'm not sure how much they currently own of gold mining stocks, but they were. So, and this is, just money they created out of thin air. The Swiss National Bank, they were trying to keep their currency was appreciating too strong, the Swiss franc was, and then they ran a euro peg, and within only a couple years, they created hundreds of billions of dollars out of thin air running a euro peg, and so, they became a hedge fund.
Exactly. And but they all are doing this. And it's one thing, well, yeah, you have the Bank of Japan that has 90% of the stock on Nikkei or something like that. So yeah, all the central banks are buying stocks to keep this up, as well as the corporate buybacks. But what I'm actually referring to is a report from the CFTC that talked about the central banks using derivatives for gains, trading derivatives. What is a central bank? I would use an expletive in here. What the business is it of a central bank to be trading like they're in Las Vegas? This whole thing has just become a big Las Vegas, a big, huge casino.
Well, they're involved in base. I spoke to Nomi Prince. Not sure if you're familiar with her work. She has a new book coming out soon. Yeah, I had dinner with her in September for a couple hours, and she has a new book coming out in a couple months called Collusion Between the Central Banks, and she thinks that central banks are basically daily talking about how to manipulate different markets.
Oh, so, I would agree with that 100%. I would agree with her.
Yeah, so I don't know if they're manipulating every single market a lot, or it's varying, because obviously we know they care about the gold and silver markets. We'll talk to wrap up the interview. We'll talk about the gold and silver markets in a second here. But, I think the CME group they admitted that they give these treasury departments and central banks trading discounts.
Oh, yeah.
So they are trading. We don't know exactly what. And we don't get independent audits of the central bank. So we've only had one. That was a partial one, and we found out a lot about that, but I don't think we're going to get any more transparency there.
Well, I would agree with that, but if you want to know what they're trading, if you just Google CME central bank program, it gives you all of it. So it's stocks, it's bonds, it's oil, it's gold, it's silver, it's it's probably even other derivatives. I'm not looking at it, but it's every market.
Well, we know they're in the currency markets too, because they care about their exchange rates so much.
Oh, which is a joke. Let's see. You are a currency manipulator. They're all currency manipulators. Are you kidding me?
Yes. Yeah. Every central bank cares about its currency, but only the really big 5 or 6 ones can actually really move their currency exchange rate a lot right now.
Well, there are ways to do it and ways to do it. But yeah, I would agree. So yeah, I think everything, and I wonder how addicted they are to using those derivatives. So they tell you how much safer the banking system is. And what I see, it's a lot more dangerous because it even goes deeper to the core. Who's going to bail out the central bank?
That's a really good question. I don't think there's an answer. John Maynard Keynes wrote, I didn't bring this up early in the interview, but you talked about them wanting a one world currency with the crypto. John Maynard Keynes wrote about the Bancor a long time ago, and he was a big globalist, big one world currency. He wanted a one world currency. So these types of people like Keynes have wanted this thing to happen for over 100 years. They've been salivating at the opportunity, and here's the technology. Like we said, it's not inherently bad, but the technology could be used for evil and nefarious purposes, and it's available to allow them to at least attempt something along these lines.
Absolutely. Yes.
So
I'm on the same page.
So let's transition here to gold and silver, actual honest money. A lot of my listeners who listen to this podcast, a lot of them are so, let's say, depressed or frustrated, angry at the gold and silver price manipulation. They don't even want me talking about it anymore and saying positive things about gold and silver. They don't want me covering it. So what do you think that says about the market? How do you think the manipulation will end or be reduced? Because we're basically at a point, in my opinion, where the mining companies, they really, especially the silver miners, I just did a short video on this, Lynette. I don't know if you saw it, but a lot of the silver miners, Lynette, the largest ones in the world, they're getting out of the silver business. They're buying gold mines. They're buying mines that don't mine silver. They want out of this business because they can't make margins. So how do you think this is the next couple of years are going to play out?
Well, actually, it's actually pretty interesting because you talked about sentiment to begin with, and I try and tell people, I'm big on patterns, and one of the patterns can be auditory as well as visual, and that is black bearish sentiment. So when people that beforehand would want to talk about gold and now they don't even want you to, I would say that is exactly the time to be building your position. And use this as a huge lesson, because when you get this black bearish sentiment, the very next thing that you should do is look at the graphs, look at the charts. What you will see is that spot gold, which is Wall Street's manipulated market, spot gold has been making what's called a cup formation, which is a very powerful accumulation pattern. And it tells you that smart money has recognized how undervalued this is and is accumulating. They don't want you to accumulate, right? So they're accumulating. The first time that, and you'll also find the same thing in the numismatic, in the collectible coin market, in the lower end of it, what you're seeing is that cup formation. So what's making people discouraged is Wall Street's manipulation. Why do you believe them? Okay, because that's what you would get if you sold it at this moment. Right, but that's also what you'd have to pay if you bought it at this moment. It's a bargain. What's going to change that? Well, guess how? A reset of the financial system will be done. Now, I can't guarantee that, but they've done it that way more than 4,800 times historically. There's no other way to do it, because you have something that has no value, right? These markets crash. There's no market for them. Has no value. You've got to reset it against something that is all value, which is physical gold. Not paper gold, but physical gold, because it's used across every single area of the global economy. So it's not money because a government says it's money. It's money because it's been accepted as money. It meets all the criteria to be a good money, and it holds its value. So for me personally, I am accumulating as much as I possibly can, because what we do here, I've been studying currency since 1987. And I know that the formulas and the patterns are smarter than I am. Plus, I always think that you should do what the smartest guys in the room on any given topic are doing for themselves. And very clearly, central banks are buying gold globally, and the individuals are buying, and I see this in the ultra rarities from PCGS, that they're buying very high-end collectible gold coins. So you have to ask yourself, you don't even have to ask yourself why. Emulate them. Emulate them. So, because when they do this reset, if they did it today, you would see gold north of $10,000 an ounce. And oh, by the way, people, if you really want to see what that looks like in real time, on February 9th, just this past February 9th, Venezuela reset their gold price, and it went up. I could be off on this. I don't have that right in front of me, but the spot price in their gold market in terms of their bolivars went up something like 2,224 times, not percent, times.
Well, Venezuela is having hyperinflation, but
voila! But wait. But the government, the official price of gold, has been suppressed for all this time. Not the black market of gold that we've been watching, but the government, the official price of gold. So this is really, for me, this is a real-time key. Because on average, there's a lot of things that start to happen once they do an official reset. But for those of you out there that are discouraged because Wall Street wants you out of the gold market, you could be in cryptos because, hey, they can control those. You can be in the stock and the bond and the annuity and CDs and savings, all that. You could do that because that's their market that they control. And whatever wealth is in there is going to stay in there during this next crash. Can't guarantee it, but I'm 100% certain of that. But you have an opportunity, we all have an opportunity to look a little south and see what this looks like, because that's what's in our future. And we all have a choice on how we get through that. 90% abject poverty. I didn't say 100%. Who do you think owns the gold in Venezuela? And what kind of gold do you think they own? Because they confiscated monetary gold in 2011.
Yeah, I was going to say Hugo Chavez's daughter and Maduro, because I believe Hugo Chavez's daughter is the richest person in the country now, and she didn't build the business. Her dad just had access to the military, and she confiscated all the assets.
My goodness. Shocker. Right? So and that's what I'm talking about. You know, if you can emulate those at the top, you don't even have to understand a lot of gobbledygook. You just have to know where to go to look. You know, they're listening to you. This is an awesome way. You know, I have my YouTube channel. That, I think, is also an awesome way. But, you know, you just have to, and a lot of my work is just going just below the surface to see. Because I listen to what they say, but I look at what they do. What are their actions telling me? Do I have the opportunity to emulate that? And if the answer is yes, I do.
So what makes ITM, the company that you work for, special then?
Well, we only deal in the physical market that you take possession of, unless, of course, you do it inside of an IRA. But anybody can do that. I mean, it doesn't take rocket science to put you into a piece of gold or a piece of silver. However, like I said, I've been studying currency since '87, and I see patterns. And so what we do here is based on your goals, your circumstances, we build a strategy for you using gold and silver, physical, and other things, and cash and whatever. But we develop these to support what you're trying to accomplish. And I don't know anybody else that does that. And you actually even get your own book that is personalized for your strategy, so that if, God forbid, something should happen and you can't get a hold of us, because we look at it like it's a marriage anyway, then you actually know how, when, where to use your metals through this whole trend. We expect to be there, but hey, I can't control if the grid goes down or something like that. So that's just a backup. So that's what makes us different.
And you guys also specialize in numismatics as well. And basically, if you're a beginner and you try to get into numismatics and you don't know what you're doing, you can lose a lot of money very quickly.
Right. We are full spectrum, so we certainly do bullion, and quite honestly, inside of the strategy, it's a well-diversified portfolio. So there would be some gold, there would be some silver, there would be some purely asset protection, so bullion, and then there would be the collectibles for growth. And it's really very comprehensive, but it's the like anybody would be doing the same strategy that I'm doing for myself, but just tweaked for your circumstance and your goals versus my circumstance and my goals.
Well, Lynette, you are a wealth of information. I want to thank you for your time today. And if our listeners want to follow more of your work, how do they do so?
Well, they can always go to our website, itmtrading.com, and we publish 3 live events every week on YouTube, so they can go to our YouTube channel, ITM Trading. And also, my lovely assistant, Megan, does a fantastic job on social media, so Twitter, Facebook, etc. I mean, we're all over the place. And, of course, we love to have, like, human conversations. So our number is 888-696-4653. And I think anybody that calls will be very impressed with how intelligent, all of our precious metals consultants are. And they've all been trained in this strategy too. So that's how they can.
Great. Well, I want to thank you again for your time, and I'd like to speak to you again in the near future. There's just, we were discussing this before we started recording. I think there's just so many different things going on.
Oh, yeah.
And the rules are just constantly changing. So someone who thinks that they know what the rules are even a year ago, the rules are changing that quickly.
Absolutely. They're trying to figure out a lot of what those rules are, and they're trying to design them to support their goals. I think the awareness of people will, I don't know, I mean, maybe I'm a little Pollyanna in this, but I think if enough people are aware of what's going on, then maybe we have a say in the rules.
Well, I'd like to be optimistic, but, people like us are getting called fake news by a lot of people still, unfortunately. So, we try to save you can't save everyone, and you try to do the best you can and save as many people as possible.
Yeah, absolutely. That's why if you go, onto our YouTube, you're going to find links to absolutely all of the backup of why I'm telling you and showing you what I'm telling you and showing you. So don't take my word for it. If more people did their own due diligence, there'd probably be a whole lot less people that were taken advantage of.
Amen. Well, that's it for today's interview, and I look forward to speaking to you again soon. I enjoyed this conversation.
Oh, me too. Be safe out there. Bye-bye.
Please like this video, share it with friends and family, and don't forget to subscribe to the Wall Street from Main Street YouTube channel if you have not already done so. We're closing in on the 20,000 YouTube channel subscriber milestone, despite YouTube censorship. And hopefully we'll be able to get to 30,000 or even 40,000 YouTube channel subscribers quickly if YouTube doesn't shut down the channel. If YouTube does shut down this channel, remember to also sign up for the Wall Street from Main Street email list that's on the wallstreetfrommainstreet.com website, and will tell you where the videos are going to be uploaded instead of YouTube. Also, if you really like the content and you decide that you want to give a one-time donation, you can go to the wallstreetfrommainstreet.com website, where there's different options for you to do so. Or you can become a Patreon contributor. Thanks for listening, and I look forward to providing you guys with some of the best information, analysis, and financial education available out there for free or paid.